InvestSMART separately managed account benefit number 12. Income when you want it. Separately managed accounts allow investors to receive income as they want and need it. Dividends from the stocks can be paid straight into your linked bank account. Investors can also set up regular withdrawals and take ad hoc withdrawals when they want. For more information, visit www.investsmart.com.au or download our new app.
G'day everyone and welcome to another Boss Talk. I'm Mitchell Sneddon and I'm joined by Tom Millner and Will Culbert from Contact Asset Management. Guys, welcome.
Mitchell, how are you, mate?
Yeah, nice to see you, Mitch.
Good. And so today, guys, we're going to be talking about the new listed investment company coming from Contact Asset Management, URB Investments. What is URB Investments, guys?
Yeah, good question, good start. URB Investments is playing on the urban renewal theme that we're seeing right across Australia at the moment. Urban renewal starts with population growth and infrastructure spend. URB Investments will be a listed investment company on the stock market. We will invest in direct property alongside Soul Pats, but we'll also have an equity component as well of stocks in the market that have direct exposure to urban renewal. And we might talk about that a bit later, but it's a two-pronged attack, but it will be an LIC managed by Will and I at Contact.
Okay, so you're holding direct property and direct equities. What's the split going to be?
There's an ASX listing rule that we have to have at least 50% in Australian equities. And then so after that, with cash and direct property will probably make up ultimately 40% of the portfolio. Okay,
and sticking along the line of that property, I believe you guys have already bought three key cornerstone properties of for this portfolio. What are they?
Yeah, that's right.
And have you got tenants in there yet? What's the structure like?
Yeah, sure. So we've got three seed assets that we've put in. Soul's has been doing this for 7 years through their real estate advisory business at Pitt Street Real Estate. So they've got their eye in on what they're looking for. The Pitt Street Real Estate guys have got a good pipeline of work, but we're not vending in old assets from Soul's. These are brand new assets that Soul's and URB have bought. The first one's at Kingsgrove, on the outskirts of Sydney. Seed asset 2 is at Preston's. It's a paddock at the moment, but we'll develop into an industrial facility. And the third seed asset is at Penrith. It's a retail commercial asset at the moment, 150 metres from the train station, 100 metres from Westfield Shopping Centre, but right on High Street and Station Streets in Penrith. So about 95% occupancy at Penrith. Preston's is a field at the moment, so no occupants. And the Kingsgrove site has a tenant in there, but they've been a long-term tenant at 20 years. It's an old site. It's ready for reorganisation into a better use.
Right, and with, say, the likes of the Preston site, are you guys going to have to foot the cost of developing that land, or is someone else coming in to do that?
Yeah, we will. We will do it with Soul Pats, so co-investing with Soul. So we've bought the land initially. We've signed an agreement for lease. We've run a tender process for the builders. Once we shore that up, we'll get construction underway, and both parties or unit holders within that unit trust will start to pay the bills of the building cost. We will probably go to the bank though and get a fixed term and fund it that way as well.
And what's the investment outlook like for these particular properties? Are you mainly holding them specifically for the income that they're generating, or is it something that into 5, 6, 7, 8 years time you're looking to on sell and then move into other potential properties? What's the outlook there?
Yeah, it's a good question. I think we'll jump in whenever you want, mate. But I think what we've seen with Souls, they roll their sleeves up quite aggressively. They package these assets up, reorganise it, push for a better use or a rezoning of that existing facility, and then on sell it. So we're not going to develop any residential towers, for example. We will do an industrial site because we've done that previously at Souls, and we've got a good experience through the network at Brickworks as well through there. So we will develop an industrial site, but we won't be developing retail areas. The retail guys, I suppose, the assets are. They've got a good yield initially, so we're getting paid to wait while that rezoning comes through. So if it doesn't take that 2 or 3 year time frame, we've got the yield to underpin those assets always.
Let's jump onto the equity side of things, sure. Will. What does an urban renewal themed stock look like?
Yeah, we've got a pretty in-depth filter we look at it, Mitch. So we're in this investment portfolio on the equity side will make up half the portfolio. But importantly, we're not going to invest in banks and we're not going to invest in resources companies. I think a lot of investors own a couple of the banks and BHP and Rio and maybe a telco as well. We don't intend to duplicate that portfolio. We think urban renewal is its own asset class. So we've got an in-depth filter of eight different criteria we look at in opportunities. Urban renewal starts with population growth, we think, but a company has to have more than just population growth to make it into this opportunity set, which I can talk about in a moment. But things including revitalisation of town centres, infrastructure spend is obviously a big one, healthcare, they're part of the urban renewal drivers that we're looking for with companies.
Okay, and so can you name a few of the companies that you're
definitely. Well,
looking at?
The thing we're excited about is that the opportunity set is still quite big. So despite the fact that there won't be any banks, and as everyone knows, the banks are a big part of the Australian index, but in the All Ords index, which is 500 companies roughly, we think there's 89 companies that meet our urban renewal criteria, which makes up about 21% of the market by market cap. So the obvious names that we'll look at for our investing process, and so we'll take the 89, we're going to have a portfolio of 25 to 30 companies, big focus on income and yield in that as well. But companies like Transurban, Lendlease, Cube Logistics are three names that come to mind immediately, but there may be some property trusts in there too. Goodman Group is doing a lot in the urban renewal space. But there's a lot of little smaller companies as well, the logistics companies, for example, that we might look to add to the portfolio also.
Okay, and this is interesting. You're looking at a different set of stocks here that might not have come onto the radar beforehand for the likes of your other LIC, BKI. Do you think you could see some of these names eventually make it into the BKI portfolio if you get enough conviction around them there as well?
Yeah, definitely. And I think that's one of the exciting things that we think Contact will bring to BKI and the existing shareholders is we'll add more people to Contact. We're looking at a whole new asset class with our extra resources, and potentially, if we find a little gem, we'll definitely look to add it into the BKI portfolio.
So BKI shareholders can get onto a winner there as well.
Absolutely.
Yeah. It is a little bit different, as Will said. No banks, no resources. BKI's got over 50% of the portfolio in financials, if you like, with a very, very small exposure to property. So URB will pick up the slack there, but as Will said, stocks like Transurban, Sydney Airport, Lendlease will be owned in both LICs. And I think the model portfolio we've run, we've got 10
out of 30,
stocks.
10 out of 30 companies are currently in BKI, but there's 20 new opportunities we're looking at for the URB portfolio.
What, in your guys' minds, are the biggest risks to your URB portfolio? What keeps you up at night when you're thinking about URB?
Deathly silence.
One of the we're getting a lot of in this theme. We think it's multi-generational, so we're not concerned about the fact that it might be a flash in the pan. There's a lot of, as Tom talked about, those three seed assets, they're all in Sydney, and that's intentional because there's a massive infrastructure spend going on in Sydney. It's our backyard, but we could see this as an Australian theme. One of the questions we get a little bit is probably because of the property exposure and companies like Transurban and Sydney Airport, there's a focus on what the rising bond yields mean for this portfolio. We're cognizant of that, but we think that we'll take that into account when we value these companies and look for the income it'll produce, but that is a potential risk. But at the same time, companies like Transurban have dropped 20% from their pre-Trump election days, and so some of that is priced in.
We're bottom-up stock pickers, so what keeps us awake at night? We're actually really excited about this because it's a new focal point for an equity portfolio that has some pretty good tailwinds of earnings. I think the average EPS earnings for the next 2 or 3 years is sort of between 13 and 15% per annum, which is, in this sort of market when you're looking for a bit of growth but also income, it's a really good hunting ground.
Yeah, that's right. And that just finishing that earnings per share growth is going to translate to dividend growth. Yeah. And in an environment where interest rates are very low in Australia, a growing income stream is really valuable, and we'll be focused on that.
That's one thing that I think would be key to a lot of potential investors out there is thinking about what is the income stream to them going to look like. Is it going to come through? Is it going to be there straight away? If you've got tenants in these properties paying you rent, you've got income coming from the investments that you hold, the stocks. Is it going to be there straight away? What should investors expect yield-wise? Yeah,
we've the board stated a dividend policy of between 50 and 70% of net operating profits. I think URB has got a great opportunity of mixing both dividend flows to shareholders, but also reinvesting a bit of that capital into great opportunities. For example, the portfolio, the equity portfolio, the model portfolio is yielding over 5%, franked at 60%. So, it's a good starting point. But as you said, some of these properties that we're buying are tenanted and have a good yield of between 6 and 8% already. So, it's in the Soul's mantra. They haven't missed a dividend in over 114 years. We're not about to start with URB and BKI in that sense as well. So we're very conscious of passing those through. And I think also being a listed investment company and closed end as opposed to a normal open-ended REIT or property trust, we can smooth those dividends over time, like we have done at BKI in the harder times.
Now, speaking of BKI, one thing that I'm sure a lot of people would want to hear about, you've got a constant slogan over there: the thicker the carpet, the thinner the dividend. How thick's the carpet at URB?
Probably floorboards again, to be fair.
Now we're very focused at Contact on being competitive on fees, and URB's no different. This is effectively an alternate asset class, and there'll be a lot of competitors of ours directly that are charging a big fee. URB's management fee will be 0.5%, which really is probably half to a third of what our alternative asset managers would be charging. So
any performance fees in there?
There is a performance fee, but it's only on absolute returns, and so it's a 15% over 8 total on NTA movement. Importantly, the dividend has to come out of that first. So shareholders get paid first, and then the 8 gets calculated. Right. So the hurdle is quite high. Tom and I will be shareholders in URB, so we're aligned, and so there is a low fee, and if there is a performance fee, shareholders will be rewarded first.
And on the performance fee, is there a high watermark set in there at that absolute return?
No, there's not. We took the view that we are managing this for 50 bips. A hurdle rate of 8 plus your dividend is quite substantial, so there's no high or low watermark.
And the other thing just on that is there's no performance fee if we outperform an arbitrary benchmark and the investor loses money. Yep. So the shareholder has to do well first before there is a performance fee.
Excellent. Well, guys, thanks for coming in. And if anyone has any more questions about URB, send them our way and we'll get them on to Tom and Will. And if you want to download a prospectus, where can they go, guys?
The website's best, urbinvest.com.au. Is the best place to find more information. There's also a corporate video that might be worth having a look at also.
And when does the offer wind up?
30th of March it ends up finishing, and then the stock will list on the 7th of April.
Excellent. Yeah. Great. Well, Tom, Will, thanks for joining us.
Thank you very much.
Members, we'll catch you next time.